This is a business that's 17 years old, growing revenues at 25%. I mean, it is just stunning when you think about the power of YouTube. But it really comes down to the fact that this has become, for an entire generation, this has become TV. People think about, we talk a lot about Netflix versus Disney Plus versus HBO Max and Peacock and all of these things. But remember, the number two most used service on a connected TV is YouTube. It represents well over 20% of all time spent on a connected TV is YouTube. And I think it just speaks to the creativity. I mean, you can find anything and everything on YouTube, and it's really where people go to watch video. And it's the only thing bigger than it in terms of time spent on connected TVs is Netflix. And it just shows you how powerful YouTube is. And I think advertisers are finally realizing that if they want to reach consumers on the big screen, like they used to do on traditional television, YouTube is now a must buy for brands.
Okay, so you're long on Google on all of this, but what does that mean on the flip side of things, what you do with all of the other TV or new TV type of products that you just mentioned? Are you go short on any of them?
Well, look, I think that's sort of the challenge that all of these smaller platforms have. I mean, I think, Becky, you, me, Andrew, we've sort of debated for probably the last couple of years, what happens to all of these smaller platforms? Can they all survive? Or are we going to see consolidation? Clearly, you saw what Discovery Plus, it's merging into HBO Max. I think it's inevitable that you're going to see greater consolidation. I don't think when you see the tech giants like Apple, Amazon, Netflix, all pouring tens of billions of capital over the next 5 to 10 years into content creation and these services, I think a lot of these smaller services are not going to survive. I mean, Disney's probably got to do something to combine with Hulu, right? Like they can't have all of these smaller services. You're going to need scale. I think that is the key takeaway. Scale is critical, and there's not many companies that have it. YouTube just makes life that much harder for these services because in the traditional TV world, there is no YouTube. You had your set of channels on the dial. You didn't have it. So competition is that much more intense.
Yeah, no equivalent. Steve, let's talk a little bit about the broader technology picture. You think that for many of these companies, the sell-off has been overdone at this point. Why is that?
Well, I think over the last month, the entire market got a correction. And what you're seeing right now is, and this is a cycle that happens every time there's a correction in the overall markets, people realize that these tech giants, they're like, the old Japanese phrase of a large conglomerate. They're like a keiretsu now, or in Korea, they're a chaebol. They've got multiple interests. As Rich described, they're the number one or two in video, ads, mobile. They're always going to be, they used to be the innovator stocks with high risk, but now they've become bellwether stocks that bounce back stronger and sooner than the rest of the market. They continue to drive profits. This is an issue for big tech. They still face headwinds from the legislature. They still face headwinds just in terms of society and consumer protection. I operate in the early stage venture area, and startups are coming, mid-size and early stage startups coming with new technology, new systems design, Web3, crypto. Also looking at marketplaces. A lot of marketplaces exist outside of these large big tech companies' sphere. And so for now, these Web2 companies, these giant platforms that have been built over the last 15 to 20 years, they still have strength. They're still peaking. But the onslaught is coming from a lot of usurpers and innovators. What's interesting right now is that this has become such a snapback in the market that it's almost become sort of an expected reaction.